Everybody. My name is Joe Pivarunas. I'm the founder and managing editor of Nanoeyes. We're a boutique media and research firm that covers disruptive tech investing for a broad audience of retail and institutional investors across the globe. Today, we're going to talk about a synthetic biology stock called Codexis. The title of this presentation is A Risky Play on Enzymes. So, before we get into that, I was a hiring manager at a leading financial services firm for about a decade and interviewed a lot of candidates. When you're interviewing candidates, it's not just about their technical knowledge, it's about their ability to present in front of a client. It's about being able to be around them and have them integrate well with the team, what they call the airplane test. And there's a lot of things that go into interviewing potential candidates. Usually, in about 5 minutes, you know whether or not a candidate is going to progress, and then you have to spend the rest of the 25 minutes pretending like you care about the interview. Now, one of the questions that we used to ask, it's a very popular question, was take the most sophisticated financial concept that you know and explain it to me like I'm your grandmother. And that really served two purposes. It pushed them to tell you the most advanced financial concept they learned, and it showed you whether or not they really understood it so that they could explain it. In the same way, I came across this explanation for synthetic biology by McKinsey, which explains the value proposition very well. As much as 60% of the physical inputs to the global economy could, in principle, be produced biologically. And one example of the potential of synthetic biology is this great chart we came across in a TED presentation. We use it quite often. It shows the all natural proteins. You see that little black pixel, and then all the other pixels around it are all the possible proteins that could be created. So there's all kinds of molecular machines that we can create that nature doesn't even know about. So that study, the area of proteomics, is one investment theme that we follow closely. Now, back in August of 2020, we published a piece titled A Pure Play Protein Engineering Stock. And that red arrow points to when that piece was published. And you can see that since then, the price of this company has gone up pretty significantly and then settled back down as all tech stocks have recently. This company, of course, is Codexis. And in that article, we took a look at what the company does. Now, the reason for the stock price surge is the increase in revenues. Now, you can tell a lot by looking at a revenue chart, historical revenues. And in this case, you can see for Codexis, we first covered them in 2015. And at that time, their revenues had fallen dramatically because they were trying to do work with Shell on biofuels. Well, that didn't pan out. So then they needed to reinvent themselves, which they did. And most recently, you can see that the revenues for the company have surged dramatically. And that's what we're going to talk about today. So I've put a little dashed red line there that shows all the revenues above that red line are from Pfizer. And Pfizer's been buying a enzyme, a proprietary enzyme from Codexis. So let's talk briefly about what the company does. They have two business areas. First is product revenue. And on that previous slide where you saw what Pfizer was buying, this is where that would be captured. This involves sales of protein catalysts, pharmaceutical intermediates, etc. Then on the right-hand side, you have R&D revenues. Now, Codexis developed a platform called CodeEvolver, and that platform has been licensed to some major firms that are using it to produce enzymes. And when they produce enzymes successfully, then Codexis gets a little kickback. And actually, these deals are structured as you can see here. So the protein engineering technology platform was licensed to three big names, GSK, Merck, and Novartis. You can see that for each of these clients, they have different structures. So there's an upfront tech transfer. This is where they pretty much onboard the client on the platform. Let's take GSK for example. So they completed the transfer. When we say that, we mean that they successfully installed and got them up and running on this platform back in 2016. When they had done that, what they call a tech transfer, they received a payment. And then after that, you can see that for each licensee created protein, they get a kickback. So you can see these various terms here. And it's important to note, I think, the times at which these transfers were completed. So for GSK, what is that? 6 years ago, and Merck the same, and then Novartis relatively recently. Now, we were playing around in the financial filings, and this is kind of fun. So on the left-hand side here, you can see a table that was provided by Codexis. I think this was in 2019, which showed the breakdown of revenues, the percentage of revenues coming from their major clients. So, for example, in 2019, Merck accounted for 28% of their total revenues. Then going forward, they decided to drop that, but it's kind of cool because you can still map these. So, on the right hand side, these are the most recent numbers. At the top, customer A, that's Pfizer. Pfizer accounted for 33% of their revenues. They all but said that. Customer B, well, if you look on the left-hand table, we can see, well, that's Merck. So then in 2020, Merck was 26% and 11%. Customer C, well, that's got to be Tate and Lyle, because Tate and Lyle in 2019 had less than 10% revenues. And customer D is Nestle, and customer E is, what would that be? Novartis. So these breakdowns are quite interesting to see which customers are contributing. And of course, the problem here is the very high customer concentration risk. So the three clients we mentioned earlier using the CodeEvolver platform, and then there's also some other clients that they're working with, but in their filings, they say they have no intention of reducing that risk by spreading out their usage of the platform across more clients. So they don't expect this customer concentration risk to change going forward. So for us, this is kind of a showstopper. It's one showstopper. The other would be the fact that Pfizer's revenues, product revenues, are quite temporary. So here you can see where we've broken down product revenues and R&D revenues across the years. And, who knows how long this stuff takes, how long it takes for these large firms to develop enzymes that they can use and for Codexis to get a kickback. But when you look at R&D revenues, not a lot happening there, right? I mean, they're growing kind of slowly. And then when you look at product revenues, there's that big bump, but it's largely because of Pfizer. So what did Pfizer do? Well, in early 2021, Pfizer began purchasing a proprietary Codexis enzyme to be used in the production of this drug called Paxlovid. This is actually a COVID drug. It's a 5 dosage drug, I believe, selling for around $530. If you get COVID and you start taking the drug over the course of, I believe, a number of days, you take the course of medication, and there's an 88% chance that you don't have to go to the hospital. So that's what the drug's all about. In the accompanying research piece we've published on our website, we talk about and provide links to a lot of information about this drug and the popularity of it and how many doses. They expect to produce 120 million doses, but you have to be careful because we just don't know the extent to which Pfizer depends on this Codexis enzyme. Is there a substitute? What's the use case? So yes, they use it in manufacturing this drug, but is there a substitute? We just don't know enough about this. Now, when Codexis describes the sale of this drug, they talk about no contracts. They make it a point to say there's no contract obligations. Pfizer just sends a purchase order, says we want this much at a particular price, and they provide it. And of course, Codexis doesn't have the manufacturing capabilities in-house, so they outsource it. Now, one would think that Pfizer, if this was on their critical path, would demand some sort of contract about minimum quantities or start to describe this relationship more in terms of, the way that it is now, just being a one-off. And then one would also think Codexis would demand something like that. But of course, when your customer is Pfizer, you don't have a lot of leverage at the negotiating table. So what Codexis has told us is that they have received and expect to receive additional purchase orders from Pfizer for significant quantities of this enzyme during the course of 2022, this year. And for delivery in this year and next. So when we look at the forecast, the guidance that Codexis gives us, there's, I believe, $75 million worth of product they expect to sell for Pfizer. And look what that does for their annual revenues. That looks great, right? Their annual revenues are going through the roof. But if we remove that, the number looks a lot different. Now, it actually looks pretty good with Pfizer removed. So if you look at 2019, 2020, and 2021, those 3 years were relatively flat when you removed Pfizer, when it came to revenues ex Pfizer. But if you look at 2022 expectations, the guidance, 83 million compared to 71 million, it's about 17% growth. So that's great for Codexis. Nonetheless, this isn't a stock that we would be interested in because we view the Pfizer revenues as being uncertain. We view the COVID thesis, as we always have, to be temporary. And heck, it's embarrassing after a while when COVID has hardly been anything but temporary. But eventually we'll get over it and there'll be herd immunity, and this won't be something that Codexis can rely on. That's our thesis. Now, there's also another component here that's worth mentioning. Codexis is working with firms, Nestle and Takeda, on developing some drug candidates. They talk about, we have invested significant time and financial resources in the development of this drug. We have mixed feelings about that. Drug development's extremely risky. It's why we don't invest in pre-revenue drug manufacturers, drug developers, well, not manufacturers, developers, because there's just a lot of external risks that can't be controlled. So this is kind of a wild card. It shouldn't be considered or counted on. But this comment about investing significant time and financial resources, well, the firm needs to survive. So one wonders about that a bit, but this is worth mentioning, and this would go into their R&D revenues, and they have realized milestones from Nestle, so they are making progress, and that's great. Now, when you look at the valuation of this company, now that it's floated back down to earth along with all the other tech stocks, it's reasonable. We divide market cap, take market cap, divide it by annualized revenues, we get about 13. That we certainly wouldn't say this was overvalued, but guess what? Most tech stocks these days have fallen and are no longer what we would consider overvalued. Now, just to conclude on Codexis, the article that we wrote in August of 2020, its first 2 points here are taken right from that article. An over-reliance on large pharma companies that have all the leverage in the relationship. So those firms that are using the CodeEvolver platform, the teams that are working on that platform, they could be let go in a reorg. These are giant firms, and Codexis doesn't have a lot of leverage. They are constantly having to worry about pacifying these large clients. They only have a small number of them, and it makes things very uncertain when it comes to cash flows. And of course, the share price, as we've seen. We like to sleep well at night. We like firms that have more predictable cash flows. And then lastly, these COVID revenues from Pfizer, they're just too uncertain from us. We don't know enough about the dependency there. We don't know enough about what Pfizer's decisions will be. Anything can happen, and we've viewed COVID as a temporary thesis, and we'll continue to do that. So that wraps it up for Codexis. Thank you very much for listening. We'll continue to publish articles about synthetic biology companies, space stocks, quantum computing stocks, all sorts of stuff. So make sure you subscribe to our channel, and we'll look forward to having you watch videos in the future. Thanks so much for your time.